Aaron, how do I pitch to an investor? So this is a question I get asked all the time. So when I work with family offices, private high net worth and sophisticated investors, everyone wants to know, how do you pitch the perfect project? So this is what you need to do before you think about pitching your project or coming to someone like myself where you need to raise X amount of funds from a high net worth or perhaps senior, junior debt, whatever it might be for a startup business, seed capital, or that's for a property project, whatever it is, it's all the same. So what do you need to do? Well, there's key things you need to think about and know 100% before you ever think about joining a Zoom call, going to a face-to-face meeting, looking to raise the capital that you need for your project. So what are these key things I'm going to share with you? You need to be able to explain your project within 20 to 30 seconds where it's very clear that you know your project in and out. You need to know it like the back of your hand, because as soon as confidence is lost, where you start stumbling, you're not overly sure on the project, you get asked questions, which you will do. If you can't then come back and counter that to why the project still works, confidence will be lost. So that's the thing, knowing the project, being able to explain it 20 to 30 seconds. The second thing you want to think about is knowing your numbers, because the numbers don't lie, and if you can't explain numbers, then that's obviously a big question. And again, what is lost? That's confidence. So many times when I've been on a call and someone's looking to raise X amount of funds because of whatever project they're involved in or company, it normally goes sour when that person is asked questions and the numbers aren't sure and they stumble and you have to look through paperwork and so forth. So again, knowing your numbers is absolutely key, and always playing out 3 scenarios. That is worst case with your numbers, conservative, and best case. What I would then do after that is decide what kind of funding you need, because there's nothing worse than saying to someone who that perhaps could fund your project, saying, you know, I'm open to options, or I don't really know the best situation or scenario, you know, to go down, or whatever it might be. You are going to someone who wants, you know, you need to tell them what you need for them to make a decision. They don't want to be thinking about it. They want you to come with all the answers, and then they can give you a simple yes or no if it works. If it doesn't, then obviously, you know, you will part ways. So you need to have the solution or the option that you want, and put that forward. The other thing that you need to think about is assets and liabilities. Too many people, I'm asked so many times, you know, could I raise this amount of funds? You know, I haven't done any previous projects, I haven't been involved in this, but I'd like to raise X amount of funds. That's fine, everyone has to start somewhere, but you need to have assets and liabilities, and that's the truth of it, and that's something that's not spoken about a lot. You will be questioned what assets you have in the background that could be taken over if a project or a company was to go south. They will need to recoup their funds. So what assets and liabilities do you have before you start asking for £1 million? You know, if you have a £70,000 buy-to-let, that's going to be no good borrowing £1 million. After that, you're then going to need to start thinking about the capital that you're putting in, because it's unrealistic and it's a bit of a faff that you can get 100% funding for a brand new business or a property deal, whatever it is. It's a bit of a grey area, so you will need capital. So that's something you need to think about before you present your pitch. How much do you have? What part of the deal does that make up? If you're raising like senior and junior, maybe a bit of mezzanine, so you need to think about that. After all of that, the most important thing that we need to look at is, does the deal work in regards to profit? So everyone talks about gross profit. We're not after gross. We need to crunch the numbers until we get down to the net, after tax, corporation tax, once your lender's been paid off, all the fees have been paid. How much are you left with net? Whether you're a joint venture partner or whatever it might be, what's the net profit? Because if a project is 12, 18 months or a 2-year project, and it's only making a small amount of net, then there's no point doing the project. So again, this all ties into confidence. Is it lost before you present the deal, and so forth? So consider all of that, note it all down, know your project in and out, and then look to reach out to someone like myself or whoever you're going to be pitching to, an investor, an office, whatever it might be. But those are key elements people do not look over or do not think about, and hopefully this has helped. Hit the like, subscribe if you enjoyed this, and until next time, I'll speak to all of you very soon.